The US dollar is still trading cautiously against a basket of its rivals. Traders are hesitant to open risky bets ahead of several crucial events. This week, the US Fed and the ECB are holding policy meetings. Besides, the US president has to take a decision whether to slap tariffs on China's imports in mid-December. In this context, investors are braced for market turbulence. The US dollar opened this trading week with a rally which has fizzled out. Today its index settled down at near 97.53, the lowest level since early November. The greenback's trajectory is now highly sensitive to Donald Trump's decision on tariffs. The market finds it difficult to predict that he will actually greenlight the new round of tariffs. So this event entails the major risk of the week. It even overshadows the final policy meeting of the Fed this year. The regulator is widely expected to leave rates unchanged. Traders are most interested in rhetoric of Jerome Powell and his forward guidance for the next year. If Donald Trump does not confirm the imposition of tariffs in the nearest 2 days, the US dollar is likely to gain ground. However, the US leader could make the announcement on late Friday after the market closes. In this case, investors will give a response next week. Meanwhile, Washington is set to impose new tariff hikes on $160 billion of Chinese goods on December 15 if the two sides fail to reach an accord. One of the most vulnerable currency pairs this week is the dollar-yen pair. If the US presents upbeat inflation and retail sales data, the central bank will add hawkish notes, and Donald Trump will not insist on the new round of tariffs. In this case, the dollar-yen pair could climb above the level of 109. Nevertheless, it's trading lower at near 108.54 in the New York trade. The US dollar sank against another safe haven asset, the Swiss franc. The Canadian dollar firmed a bit, taking advantage of the weaker American counterpart and rising oil prices. The dollar versus the Canadian dollar pair made a correctional decline to 1.3222. Then the pair consolidated at near the support level. Analysts assume that the correction is coming to an end with prospects of a further climb. Support is expected to subdue attempts to move lower. If the price rebounds from 1.3226, it will head for the resistance level of 1.3295. It would be a good idea to take notice of the US labor productivity data, in particular a measure of output per hour and a unit of labor costs. These metrics measure the US overall economic health, making an impact on GDP forecasts. So these indicators could increase the volatility of the US dollar. That's all for today. Thanks for watching and see you back tomorrow.